Alright, so currency algorithm. Let's actually do, I'm going to put a trade on based on how I want that EA to work. So your Aussie is still short. So this is why I had both up here. We'll look at the 5-minute and the 15-minute at the same time. Let me get rid of my other marks. So it took the cross short, which would have been right there. It's the cross. The close confirms it, so it opened it on that one. And then we want to put it on the 15-minute. See, it's on the 15-minute Keltner channel for the zone. And it gets its 1-to-1. And I'm going to test with the 50% break even. So it'll move to break even at right there at 50%. That was a 100 pip move? Dang. So that's an example of the trade it would have took. It took any one of these coming down if it was saying short. So you can use any of these other crosses. It would stop at the Keltner channel. Also just got to take profit. You're at least in break even. We'll come back to this. So let's go back to the algorithm. Aussie yen long. You should probably look at all time frames at the same time. So yen looks like it was gaining some strength. Looks like the euro is the weakest. That's the euro is the weakest across the board, and the strongest is looking like well, the Aussie. There's really no clear cut, so we'll skip that. So let's go to normal trading. There's probably not going to be much. I don't know how much we're going to go through. I think yesterday was some pretty big movement. You should just let it play out because the stock market's still open today. And it got crushed last night. And that just made our whole move we were waiting for, didn't it? Remember, we said it would make this impulse down, it'd make its correction, another impulse down to be similar to, let's go to 4 hour and see this better. It'd be similar to this, impulse, correction, impulse, impulse, correction, impulse. Well, it did the same thing, impulse, correction, impulse, and now we're sitting at that line. So now we got to wait and see. Need more time or more information to develop. But just look at the wave structure, how it plays out, even regardless of what news is coming out. To me, it's always amazed me. Regardless of what news comes out, we didn't know what was going to make an impulse, but something was going to make an impulse down. And so election last night made an impulse down. So we'll see what this does. I'm assuming it's going to give us more upside. If you look at it like this, as a 1 and 2, 3, and you get the 1, 2, 3 correction, and a 1, 2, 3 move along. So that's why I would anticipate this to keep going. Look at it on a daily. I don't know who's been here trading with us for a while, but remember we've been talking with the dollar index since it's back here, going back up here to test these highs. And this was back in, must have been May and June when we first started. We were saying this was going to keep going long based on the flat that I was putting up here, and then it should keep going long term. Look at it on a weekly. So on a weekly, you can see the upside potential to it, to this 270. This would be your flat in the middle. Where's my MACD? So here's your impulse, the correction, and it's on the next impulse. So we'll see if that holds. If that is the case, your USD is going to continue short. Man, this is all over the place, back to where we started. So again, I'm not taking the trade today. We'll maybe check it again tonight. But you do see it did close that gap we were talking about this week. We don't really trade gaps. Some people do. But these always have a tendency to close. They don't always close, but the tendency is there. So that's why we did not take any shorts the first part of the week. Same thing with pound dollar. Pound dollar closed the gap. Same thing, we never took any shorts. Aussie dollar. We could have took that long. We did say we could have took that long. But again, this one, big spikes. It's in the middle. Now you got to wait. NZ dollar 2, big spikes. Dollar CAD. Stupid dollar CAD. I stopped trying to trade this one because this would have been some good shorts, but then the election happened and that happened, and now we're back right in the middle of this whole thing. So again, need more information to play out. But this one did also close the gap. Dollar yen closed the gap, which is right here. Big spike from last night. This was huge. 400 and like just over 400 pips. So you can see the spikes all over the place. When those happen, same thing like in any news event, when the spikes happen, you have to let it play out and then look for a trade once it settles down. Because this probably isn't over with the stock market going to be opening here this morning. So I don't see anything this morning for trades that it would be high probability to me. Did want to go over some more of the automatic account flip EA that I went over last night, or not last night, yesterday morning. If anybody has any more questions on that, they can ask. Otherwise, to me, it's been looking pretty good. Let's go back to our Euro Aussie. And let's actually do this. So a lot of you guys might remember this spreadsheet. I'm going to do this assuming you're not using FX Glory. So the thing I've always, I don't want to say preached, but why these account flips have worked for myself is I've always done trades until I'm house money very conservatively. So I would either do, I'd risk, maybe I'd take it in 2 trades where I'd do 50% risks. That way if I lost, I would max out that next second trade and you'd get everything back. And you'd be able to continue and keep trading. And then once I was house money, I would do that. When I was house money, I would max out the balance. And then once it was up a couple $100, I would start doing 50% again. Because when I've done a few trades and was up, I never wanted to go back to my starting balance. So you could still lose a couple trades as long as you didn't lose a multiple in a row, you would complete the account flip. Now to do this manually, it can take you a month. You might do 7, 8, 9 to maybe 10, maybe 11 trades in a month of really great trade setups. So this is the way we've been teaching it. It works. The way that my trading has gone the last few months is leaning towards automation, because really anything that's a logical step-by-step can be programmed, and everything I've been doing with my account flips have been basically logical step-by-step. You risk this much percent, you take a good trade. If you lose, you double down, get it back on that next trade, and you keep progressing. Once you have your initial deposit, once you've made 50 bucks, you withdraw it, and now on trade 3, we're going to trade more aggressive with the profits. So the whole logic behind how the EA is going to work is going to be the exact same. So on this example, I have $100 as a starting balance. Myself, I figured that if you start with trying to get 12% per trade, you can lose 3 trades in a row before it maxes out to get everything back that it lost. If you start to get 25% per trade, you can lose 2 trades in a row, where trade 3 it will max out and get back what you lost. And then if you do 50%, obviously it's half your count, so you can only lose 1. So the EA, you're going to be able to designate what risk setting you want. My example here, we're starting with 12%. This is assuming EA lost its very first trade at 12%. It automatically would on the next trade, wager that same amount that it lost to get it back on trade 2. So in this example, it's 13%. It's not going to be percents, it's going to be what you lost. So it would have did $11.88 is what it would have wagered to get right back to $100 on the second trade. Now, the EA is going to do all the calculations for you. One of the things trying to teach account flips is people struggle with getting the correct lot sizes. So in our example, oops, leave that at 15. Put this back to 5. In our example, our entry would have been there on the cross, and then the close confirms it. So the close confirms it, so the trade plays at the open of the next candle. So that's where the trade opened. And our stop, you can use the 15-minute Keltner channel, the 30-minute Keltner channel. So my example is the 15. So it would automatically calculate this distance, 105 pips. It would add the spread and the commission. So we'll say that was 4.2 pips. So it would take that $11.88 divided by 110, and that's the lot size it would put on automatically for you. So it does all that work for you. So you lose trade 1, trade 2, it gets it back. Again, let's say you lose trade 3. This is just scenarios. Obviously, it could be different. Trade 4, it gets it all back. And then we do 0.12%. And this is not supposed to be there, so we'll change that. We're going to do 12% per trade until it's house money, or the computer would. So you'd be house money after this 11th trade. And then it doesn't withdraw it for you, but it no longer considers the $100. It won't let the trade go into that. So now you can set it to trade aggressive, where you can risk 50% per trade. This will be a setting you put in there once it's house money. What percent do you want it to risk then? And if it does however many more trades, I don't have to get into all the detail, but you also have another setting of benchmarks. So as soon as you get to, say, 500 bucks, maybe it'll drop down to 0.25%. So that way if you lose, you can have 2 chances of losing. So if you do 0.25% and it loses, so minus 0.25, the next trade is going to put it on at 0.33, and then it'll continue to go. See how it gets back everything it lost. So it'll do this for you trade after trade after trade until you hit your designated amount. And the other benchmark I would use, so when it's at like $900 and you want to make 1,000, I would do this at $800. It changes to like 0.2%. So then it puts you just over your 1,000. There, so in 18 trades, no, 20 trades, it took you doing this process. So I've played with these numbers. I know this sounds like, oh, you got to win so many trades in a row, blah, blah, blah. Actually, no. It depends on what percentage you take. You can have anywhere between a 62% to a 72% win rate. And as long as you don't lose 3 or more than 3 in a row or more than 2 in a row, if you're doing these settings, the account flips. So there's different ways you can risk stuff. So once you house money, maybe the next 2 trades, you do the full risk, and then you back it off because that was your risky part, the chance you took, and now we can back it off to 25% per trade. And these are all different benchmarks you can put in there for it to do. So you might think this could be a lot of trades. Really, it's not, because when you look at the when you look at this, I was looking at this since last week, or not last week, since Sunday. Where's Sunday open? I don't know, I was doing it, and one night it had 5 different turns heading down here. There's Sunday. So from there coming down, there were like 5 different entries it would have took. So it could potentially take 4 or 5 trades in a day, where you could probably flip an account if you were maxing out and pushing it. I think you could probably do it, and they're getting good entries. You could do it in a day or 2. Because maybe you don't start with 0.12, you start with the 0.25. This is probably how I'm going to test it. Do 0.25, and it's basically after 3 trades. I think because sometimes it's close, so you could still go house money at this trade. And then once you're at 0.25, you start maxing out the full amount. So still in 7 trades. Again, this is where you can then back it off. Because in case you lost this trade, minus 0.5, it would get it all back on that next trade. And then do 0.5 again, and you completed the account flip. But if you did it this way, get house money, and then what do you have to lose, right? This is 6 trades. It went from 100 to, okay, we'll use 7 trades. 100 to 14, almost $1,500 in 7 trades. When the EA is going, you could probably do 7 trades in a day or 2 days. I think will be plenty of chances to get that number of trades, especially when it's taking the trades with the algorithm, because the other feature that's in there, this work more for when you're not house money, or depends on what you're risking. So you see that was the entry, and you can place a percent stop loss. So you can, in this case, if it's at 50%, it would move to break even. And as soon as it's moved to break even, you can choose for it to go look for another trade setup. So you could have 3 25% trades going at one time on 3 different pairs that they all end up hitting, and you ended up doing that first step to get house money. You did that off the bat, like off your first, couple hours of it trading. The other thing this does is I was doing this on the Aussie yen. And my lines are still there. So I was doing this on the Aussie yen. Just every single turn that it made, I would do the whole zone thing, And then you also have a minimum zone. Like you're not going to want like a 5 pip zone, because sometimes that Keltner channel, let's bring it back up. Sometimes the Keltner channel is really, really small. You don't want a really, really small zone. So you'll be able to put a minimum zone. So I was doing this with a 15 pip. The minimum zone it could do would be 15 pips. So if the Keltner channel was 10 pips away, it would automatically still do minimum 15 pip zone. I was doing this without even picking a direction, just doing it with just random. Not even random, just all shorts. I was looking for every single turn short. And it ended up not losing X amount of trades in a row. I think it was the max it lost was 2 trades in a row. Reason being is because of that break-even feature. So the short would have been there. Let's see, where's the Keltner channel? Get rid of some of the stuff we can see. So this would have been an example of needing the Keltner channel. So that's about 15 pips. Hits the break even, but I don't want it to hit the break even for my example I'm trying to get. So it misses the take profit, but you had a 50% move to break even. So it would have got a break even right here when it went up and reversed. Same thing with this one. Crosses short there. It doesn't hit your take profit, but you get a break even. Well, that is actually a great question. That would have been a loss. But that's just one loss because you can see it gapped past it gapped past your break-even line. So it went to close here. It would have closed you up here. So that would have been a loss. So again, Fridays, you also be able to turn this off on Friday so it stops taking trades. Again, so it doesn't take trades on Sunday. It stops taking trades on Friday because of these gaps. So sticking with the same idea, the shorts, where is the cross happens? There's the cross. I was using these green ones so it didn't have as many. So it crosses there, confirms there. So that was a loss. So that'd be a loss. The next trade crosses short again. And there's your win. So again, you only lost 1 in a row. Or even if you count this gap, you only lost 2 in a row. Or if it was missed it, you still would have got a break even. So this is going against, way against the momentum. Another break short, and you get a loss. So it's another loss in a row. And this is obviously, it wouldn't take trades against the heavy trend like this. So you got 2 losses in a row. Cross, confirms, and you get another win. But that might even be break even. It was close. But this isn't the exact entry. The point is, just you can see how randomly, if you take the trades using this, how well it works. And this was actually, we would have been going this way trading, not short. Because we would have been in up momentum. So I'm showing you trading against the trend, how it still doesn't lose, 3 trades in a row. And that's why in my example, you can lose 2 in a row going for 25%. Because if it loses 25%, it'll automatically try to get it back at 33%. If it loses that one, it gets it all back on that third trade. Get rid of this. See how we're back up to basically 100. These are just precise. These aren't precise numbers, but You get the idea. It gets back up to 100, and it continues again at 25% until it's house money. And it doesn't withdraw, but it stops going, letting it go into that, and that's only considering the profit for its trades. So 12 trades goes with $1,000 in this example. Do I think you can get this many in a row? Yes, because of that break-even feature. And why is it? It's going to be a percent because you really don't know as it's moving. Sometimes you might have a 20 pip zone. Sometimes you might have a 30 pip zone. So you can't use this same set break-even line. It has to be a certain percent of the zone. Because the thing is, 50% should be enough. I think I showed this yesterday. We use this one example right here. It's a good example. One thing, reason people hate break-evens is because they're not on the screen to then catch the re-entry. Well, this is actually doing it for you. So if you took the trade at the break, and we're going to put the, I don't know, we'll just use the zone so it's not in this. But you can see how your break-even would have been, I'm just saying 50%, you do whatever you want. But 50%, it would have hit the break-even, didn't hit the take profit, would have took you out of the trade there. So you've been out of the trade. But you can see as soon as it takes you out to break even, there's another cross short where it can put you right back in the trade. And you get to take profit with, again, a 50% break even. This was in a span of an hour and 40 minutes it was doing this. So this would go 24/7 if you want. That's why I'm saying this may look like a lot of trades, but it's really not, considering you can do 4, 5, 6 trades in a day. So if you want to be uber conservative, you can just do 25% the entire time. So as long as it never loses 2 trades in a row, or it can lose 2, so it can't lose 3 in a row. It can lose 2 in a row because that third trade, it gets it all back. You do an account flip, and it takes 16 trades at that pace, go from 100 to 1,000. You know, you can put some losses in here. So minus 0.25, gets it back at 0.33. Minus 0.25, minus 0.33, doubles down, gets it all back. And then it takes 21 trades if you go to 1,000. And you lost 1, 2, 3, 4, 5. So you lost 5 trades out of 21. What's 21 minus 5? 16. So 16 divided by 21. 76% win rate. 76% wins, and it still flips the account for you on automation, which was house money after so much. So even if it did go 4 trades here, no big deal. It would start back over with your $100 and start back again at your 25% or 12%. I use these numbers because this is what allows you to max out. So when it's on this trade, there's nothing left over. Let's see, I have a few questions. The question is you'll have, I mean, Dustin just asked, is this you'd use on a different account than your big money account? Yes and no. So the great thing about this is it would be U.S. broker compliant with their no hedging rules, first in, first out. So a U.S. citizen who has like FXCM would be able to use this because it never opens up more than you can have it. So it doesn't open more than 1 trade at a time, and it doesn't hedge. So it still work, and it would just be a different strategy, which still would be amazing. So instead of going from $100 to $1,000, you could do it as 1%. So if you had $10,000 in an account, and you're risking 1% of that, $100, and that 100 went to 1,000, you just went from 1% to 10%. So you could possibly do this. It probably might be better than the other EA, is where you'd risk 1% to gain 10%. So that's why doing these account flips, if you're looking at it that way, is 1% to gain 10%. You know, you could go more aggressive from the start, because you're only risking 1%. So if it were to lose 2 in a row, all you lost was 1% of your account. So the chances are it's not going to lose 2 in a row, or we'll get it so that the entries are better than that. So after trade 2, it withdraws, and you could have it then max out. And basically in 5 trades, it goes from $100, makes $984 in 5 trades, which is just short of 10%. So in 5 trades, you can take 1% to 10%, which after trade 2, you're no longer even risking your 1%. And then the other math thing to put in there, or logic, is once it's house money, go open up another sequence, taking different trades, and you could have possibly 2 1% account flips going from 1% to 10%. So there's a lot of possibilities with it. You just need to get the entry down where it doesn't lose this many in a row versus this many in a row, depending on what you're starting with. So a lot of possibilities with it. I mean, to me, it could almost be better than the other EA, because you can do it with small accounts of $50. You can take 50, because the thing is you can do this without any emotion in it too. Because even if you start with $50, you go 50 to 500 in that many trades. So after 5 trades, you made, is there a time where you could hit 5 trades in a row? I think for sure. You take this $480, and maybe now you start with $200. This is all done for you while you're sleeping, while you're working, not having the emotion of the account flips.
I think it's pretty cool that you can, this could be, because we get questions from people if they can trade with our strategy with like an American account like FXCM. So this is cool that they might not necessarily do break evens, but if they lose, it's only 1% on their trade. So it's cool that they can still participate, and you can capture those people too.
Yeah, and they can even do risk. If they risk 2%, they're going to gain 20%. So you can risk 2% to gain 20%.
That's pretty cool.
Yep. But for that, somebody would probably need, well, I guess you could do it with like $10. You could take, if you had a $1,000 account, $10 would be 1%, right? Yeah, so you go from $10 to $100. So you can still do it with like a $1,000 account. It just, the first trade would risk like $2.50. The next trade would be $2.50. Wait, no. How would that work if it was $10? Let's put it in and find out. Yeah, that's right. So starting with $10, it's house money there. So trade 3. Yeah, it goes from 10 to 100 in 6 trades. So yeah, you could still do that with a $1,000 account too. A $500 account, I mean, it'd be crazy trying to flip $5 to $50. Still can be done though. So you could also use it that way if you don't want to do a full account flip and you want to test it with $5 at a time. Because what's cool is you'll tell the EA how much to start with every time. So you could have 10 grand in an account, but you tell it only flip $25. And it'll only count this $25. So you can do this in a, you don't have to have a high leverage account. You just have to have money in the balance to hold it, because you'll tell it, you'll enter it, only do $25 and it'll use this. So if it were to lose 2 trades in a row, it would stop running and you'd have to rearm it and put a different amount in. And once it starts the process and does an account flip, if it loses here, it automatically goes back to that 25 again, and it'll continue to keep going. Dustin says, a little bit annoying again, something new before actually getting to use previous idea products. It's not completely new. This was our main product. This was our main thing we started with, was the account flips. This just does it for you in automation. It's nothing really new. It's just done for you. And all the entries that this thing is going to do is the same exact entries that is in the other EA. The other EA is going to be trading with the algorithm. It's going to take 5-minute crosses or these Hull moving average crosses. You can do either one. It's going to use the same Keltner channel for calculating your stop distance. You could also set it as a permanent stop distance. That's why it shouldn't take long for the coder to code it, because he already has the base framework done of the algorithm for the direction, the TDI cross for entries. Everything's already in there. So they're basically are the same. They're just different management or money management styles. So like the first one is it hedges. So you're not risking the full amount. It'll hedge its way out to break even. And the only difference with this one is it's a set static stop, and you're telling it how much to risk. And it doubles down when it loses. So even if you don't want to do it the account flip way, you could still put this at 0. Start with, say, $50, and you want it to risk 5% every trade, and it would do 5% every trade for you. And when it loses, it would then do 10% to try to get it back. Let's do easier numbers. So we'll do $100. So if it loses $5, the next trade is going to try to get it back. So now if it loses that one, it's lost $10. The next one, it's going to try to get back. If it loses that, it needs to get back $20, and it'll do this for you. So and everything's the exact same as far as the entry criteria. Like, you'll still want to understand crosses. When is it good to take across certain directions? When do you want to stop taking crosses? What Keltner channel is the best for the zones? It's going to be the same for both strategies. Does that make more sense? How it is the same thing. It's just the management of the money is a little bit different. But if you don't want to use this one, by all means, you don't have to. You can get used to the other one first. I got it yesterday, late yesterday. I got a very, very, very beta version of it. It still needs work. So that's why I was hesitant to even tell people, because I already have a million questions on it. So if I send it to anybody, they're going to have the exact same million questions that I don't have answers for. I can add a little bit on that chart. Oh, because of the visual. That's why. So here's some of the inputs. You can do maximum simultaneous entries. You can change. If it's the same pair, you have to be so many pips apart. You have a global profit of 1%. So when all 2 of these trades are open and your profit's met, it closes both trades. That's already in there. Recovery zone, your break evens, your stop and start hours. Here's the differential settings, and then here's the TDI settings. So TDI is true. If it's at false, it won't use it as an entry. So time frame, you can do 5-minute crosses. You can have it as soon as it touches, it'll put the trade on, or you can confirm it, which means it has to close below it. The Keltner channel is on here, which this doesn't work yet. It's true, so it uses that, and you can have it say, I want to take the 15-minute Keltner channel zone. This is the period. You don't need to change those. That's all he has in there so far. So like I said, it's a very basic version. This part doesn't even work yet. The TDI, that all it does is put the trades on for you. So like I said, it's a very basic version. This, I don't think this works yet because I back tested on one pair, and the trades were like 50 pips apart, and it didn't put on the second pair or second trade. So I don't know if that means it has to be in different pairs or not. So there's a lot of stuff we got to work out with it yet. And then some of the features don't work quite right yet. So he's making progress. Good question. Actually, your question is, are the stop loss and take profit orders the broker sees like the previous? No. Well, the one that's coming out, I don't have it in there, but so here's the logic of what he's going to be coding. This is 3 pages of the logic, and I have that in there for the user can choose to ghost their entries. Stop loss. Yeah, so some people don't want the broker to see their levels, so you can have it, yeah. So you can have it so it ghosts it. What ghosted means is the broker never sees it. It's not put in as an entry order. So I'll be giving him this, and this is all the logic, and he should be able to code it off based off that. And this is the Hull MA code for the changing colors. Anybody have any questions, thoughts? If you don't want to use it, you don't have to use it.
I don't know, once this is done, and you can put this in our intro video or put some videos of this working on our website, and your prospects you want to show this to, like people that you want to introduce to the group, I mean, they're going to see this and just be amazed. Like, not only can you grow an account, a bigger account on automation, you can flip accounts on automation. Like, doesn't get any better than that.
No. And just have to play with the settings and find out what zone's best. Like so far I've been trying to use the 15 because you can see on a 15-minute, if it would have took entries on a 5-minute going up here and the zone was below the 15, you can see where it would have not hit the stop. And the higher you go up, the bigger those get. So if you go to an hour, the zone ends up being huge. So if you want bigger zones, bigger take profits, you just use a higher time frame. Show how to run a back test. Sure. We'll do that quick and we'll wrap up with that. So you load the EA like normal, and then you have to select it out of your list here. Select the pair you want it to trade, symbol, use every tick, and then date. Click use date and pick the time frame you want it to test. Visual mode, so if you want to see it going on the chart, you have to have this selected, and then move this slider bar. So this slows it down all the way to the right, speeds it up as fast as it goes. You can pause there. If you want to look at the periods, if you want to see the crosses, you have to change this to 5-minute, or you won't have the crosses yet. So you can run that on hours, just what time frame the candles play out on the chart. Then you go to your experts, you pick your entry. You can't back test the differentials, so you'd have to use one of these other ones. Then you set your recovery zone. You just set your settings like normal. And then if you want to change the dollar amount, you have the initial lot size right there you can change. And then the starting account balance is under here, initial deposit. So if you want to start with a $10,000 initial deposit, hit OK and start. And it's running. And just put on a short, looks like. Oh yeah, you fixed this too. So now it doesn't count the pending order. So it just says one trade instead of two trades like it did before. It doesn't count the pending order. So I just got to break even. So that's how you do it. And I think it just bought there. Yeah, so it bought again there. There's your take profit. Again, this is still going off the EMA, but it should be a little bit better at least because it has the TDI crosses in it. If you want to see the crosses, I have a... So it was counting that little cross there was the entry. And right now it almost beat a break even at 50%. Right there it looks like break even, 50%. Yep, and there's the break even. And first take profit. So just made 15 bucks. You can see now it's not putting another trade after trade on. It's going to wait for this to come back down and then cross back up it to put it back on. The old EA would have put you in long right there again, which we didn't want to happen. You end up putting it to the same spot anyways, but you get the idea. And that was on the close. If you had it on the touch, it would have been down here further. And I don't remember what zone you put on here, so I have no idea. And it looks like there's another trade right on right away. So it looks like there's two in there now. So still got to back test, figure the things out, how it actually works. That answer your question, Dust? You can see the lots as they progress on the results. If you want to stop it, you just click stop. So you load your EA like normal, and then once it's over here, it'll be in this drop down, which this is under strategy tester, sorry. The magnifying glass is strategy tester. Sound good? Cool, we'll be out again tonight. Maybe we can get some setups for tonight from once the stock market opens, which looks like it is already or should be soon. And we will talk with everybody later. Everybody have a good day.